Do you know the risk factors for type 2 diabetes? Or what makes it more likely you or someone in your life might have the disease? With type 2 diabetes playing a growing role in the lives of so many, you need to know. In Project Power, a community program from the American Diabetes Association is here to help. Take our risk test today at diabetes.org/projectpower. You can avoid the risks of type 2. Project Power will help.
Think you know Amazon? Think again. Did you know you can get a seasonal warehouse job offered today? You don't even need to interview. That means you can make extra cash before the holidays. You can even pick your own payday. And seasonal jobs can lead to full-time, regular employment. You'll be amazed by what you can get as an Amazon warehouse associate. To learn more about all the benefits of working a seasonal job at Amazon, go to amazon.com/hourly. Amazon is proud to be an equal opportunity employer.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Yeah, right? Good morning, everyone. Oh, welcome to the China shop. Feel those gentle rays of sunlight drifting in through the open window. I'm just kidding. Hello and welcome to the China shop. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of financialineptitude.com. Kyle, how are you doing?
I think I'm doing all right.
Doing all right. Another week notched under the belt.
Another week under the belt. The week ended green, but there was definitely some causes for concern this week, but we'll get to that.
All right. Come on into the shop with us today, folks. Sit back, relax, hedge against that rage machine. We'd like to welcome any new listeners just joining us. We're here smashing our way through a complete set of fine China, sharing those ever-growing strategies for maximizing gains and cutting losses. If you are new to the shop and stock trading in general, you can always check out our knowledge and resource centers on financialineptitude.com, or you can give one of our many beginning trading episodes a listen. We'll have all those links for you in the episode description. But best place to be is come on, join us on our Discord server. Tons of amazing people get on there every day and have just a really awesome time sharing trading thoughts, opinions, wins, losses, journaling. It's just fucking fantastic. Totally free. No paid tiers or special access areas. And in fact, when you do join that server, Kyle,
yes,
they don't pay money.
No.
What we do.
They have an opportunity to receive a welcome gift if they just send me a DM.
That's right. It costs us money.
Yes.
Doesn't that make you feel good?
And we also throw away that data. I don't keep track of houses to sell to people because that's bullshit. One of my pet peeves.
Right. I would, but I don't ever get to see any of these mailing addresses, so it's safe.
That's why they send them to me.
No, I'm kidding. I would never do that. I would never do that. But send DM Kyle your mailing address. We'll send you some smash it yourself swag straight from the shop. If you've already got your free swag and you want more, you can always visit the shop. We got plenty of fun stuff for sale over there. But most of all, we're just really glad you're here. We have so much fun here in the shop. It's always better with friends. Always better with friends. Mm-hmm. And so pleased as punch. Is that a phrase? Can I say that?
If you want to.
Peached as a punch. I'm punched as a peach that we have so many great people in that Discord server, Kyle.
Some amazing people, really. I know I've learned a lot from them.
Yeah. Oh yeah, absolutely. Oh, God. Everybody there knows a bit more than me. Anyway, Kyle, we got any show news to report?
Yeah. Aren't we talking to your friend next week? Dan Springer just got funded.
Prop trader, yeah. That's going to be exciting.
Let's see. A week after that, Dr. Hans, the investing tutor. And Halloween, we'll be talking to Alex Demosthenes.
Ooh, Demosthenes.
Trader on Twitter. He just celebrated his 1-year anniversary of going live again and doesn't look like he's looking back. So looking forward to talking to him about some of the things he learned in that past year.
Oh, that'll be exciting.
Mm-hmm.
Exciting. All right. Well, strap in. We've got an expanded, expeditious, exquisite episode for you today. Lots of market moving news, plenty of stocks on the radar, and more options than dollars spent developing the metaverse.
You mean wasted?
Dollars burned developing the metaverse. Oh, and reach out to us, folks. We adore your messages and comments on Twitter and Facebook, up on that Discord. We'll have that Discord link in the episode description. If you're old school, you can send us an email to 2bulls@financialineptitude.com. That's the number 2, bulls@financialineptitude.com. Or you can give us a text or phone call to 725-22-BULLS. That's 725-222-8557. Maybe you got a hot stock tip. Maybe you want to tell us about a great trade you made. Or maybe you sent your son to summer camp and he drowned while camp counselors were having sex in the cabin. And now they want to reopen the camp, pretend like nothing ever happened. And it's up to you to stop them.
Huh. Sounds like is that a horror movie?
It is. It is.
I have no idea because I'm not into horror movies. I would guess like one of the Friday the 13th or Jason, one of those.
Oh, you nailed it. First try. Oh. Friday the 13th.
All right. Yeah. All right. Feeling good about that one.
That was, I mean, I hate to spoil that movie, but that's the big twist at the end is Jason's mom was the killer in the first one.
Oh, I forgot about that. I remember seeing the first one as a very young age. Quite inappropriate.
Younger than you should have been.
Like 5.
Oh, good Lord.
Yeah.
Let's move on and talk about some bet results.
Oh, no. Well, here's the thing. We tried to go short on Upstart. It opened the week at 21.16, closed at 22.94, but our stop was at 23.05, which you guessed it was hit on Tuesday. So, and I had to double check the math on this. It didn't quite seem right, but it is definitely right. We went from $511.63 down to $465.93.
Whoa.
Yeah, that one was painful.
That was not a tight stop.
No, I thought it was tighter, but that's what happens when the stock dumps on Monday before open.
Yeah, and we didn't have any caveats. Damn it.
Yeah, it's our fault.
All right.
Oh, well.
All right.
But on the plus side, Random went with Dolby, DLB. They opened at 65.10 and closed at 64.28. So Random is still losing ground. Well, I guess he gained ground, but he's still losing money. He's just losing less of it than we are. Random is sitting at 446.80 right now.
Yeah. Eat a dick, Random.
So, I mean, it's still anybody's game halfway through here. We're going to have to right the ship on this one.
Okay. All right. Well, I'll have to put my thinking cap on to help pick a good bet pick this week. Yeah. My pick did not do good last week.
I'm not even going to bring up my pick. I'm just going to submit it again for this week.
All right. Stay tuned to the end of the episode. We'll be back. We'll take care of that then. But until then, let's talk about some news.
Dow drops deep on moving inflation, COVID frustration, war damnation. We're just bringing you the fucking news. You gotta recognize the game if you don't wanna lose. We're just two bulls trading information.
Yeah, we are.
Rioters raiding, insider trading, taxes are raising, bills on the hill. We got a crypto mill. No, they ain't growing weed. When the Fed speaks today, it's some shit we don't need.
Sing it, Dan.
Two bulls trading information.
What?
Two bulls trading information.
I'm inclined to agree.
Two bulls trading information.
That is accurate. Very accurate.
All right, Kyle. What do we got? What we got on the boards today? What do we?
Oh, let's see. I've got a story about the Fed draining the stock market. Barry Sternlicht.
Draining the stock market.
Yes, that's the reason why I pulled this up, is because his quote on here. He says that the Fed is draining the stock market and even the healthy fish will die. Billionaire investor Barry Sternlicht.
Barry Sternlicht. Okay.
Yes. He jumped on to an interview with Bloomberg and really criticized the Fed. Criticized them for their delayed response to tackling inflation, over liquid market conditions. He said that soaring prices finally prompted the bank to issue aggressive rate hikes and begin shrinking its balance sheet this year, but the rapid pace of tightening could easily send the economy into a recession.
Yeah.
He said that Powell is unbelievably late in doing this. He sat still while the meme stock craze was going, and then added that the belated reaction could kill off investor gains across the entire market. Let's see. They said here there were really smart things that people did. There were really smart fish in the pond, and there were stupid things people did, and they were idiot investments. So you thought the healthy fish would survive and the sick fish would die, but the Fed is draining the entire pond, so everyone's going to die.
Yeah, we've been pretty critical of the quantitative tightening amidst everything. Like this is new stuff.
Yeah, but it's the first time somebody came out and said everyone's dying. That is the most bearish statement I think I've read. Let's see. This is, in the story, this says there's other experts that are predicting more pain. Jamie Dimon, I think we talked about him recently, from JP Morgan, the CEO. Mm-hmm. He's warning that stocks could fall another 20%. And Dr. Doom economist Nouriel Roubini has said that stocks could plunge as much as 40%.
Wow.
So,
okay.
And then this is what really caught my eye here. Sternlicht was saying that the Fed could be over tightening the economy because they base their rate hikes on CPI, the Consumer Price Index, which is remaining well above the 2% inflation target. But that index lags behind the economy by about 18 months, according to experts.
Whoa.
Which means that the central bank could be basing all of its decisions hiking rates on outdated information, and that in turn risks screeching the economy into a downturn.
How is it an 18-month lagging indicator?
Well, there's a story about that I could pull up and read if you'd like. April
2021? Was inflation that bad in April 2021? Because I don't...
Let's see what... the article it links to is from Wharton professor Jeremy Siegel. I pointed to the August Consumer Price Index report on Tuesday, which showed above expectation inflation reading of 8.3, caused stocks to plunge, most since June of 2020. Inflation lags the CPI report, he said, who has previously warned the Fed is being too hawkish in its current policy stance and that the stock market will actually surprise to the upside as inflation continues to fall. He said, we've actually had a lot more inflation over the last 18 months than recorded in the official statistics, and we're going to show a lot more inflation in the next 18 months. The delay largely due to the housing market, which accounts for 50% of core inflation. Housing prices were only up by 40% in the previous year and a half. The CPI housing index only saw an uptick of 7 to 8%. Now, the reality on the ground is that prices have stopped rising, Siegel says. Do you see that in the CPI? He said, no, you will not see that in the CPI for 18 months. What I'm saying is we are going to get that overstatement in inflation just like we saw that understatement.
I mean, I understand that there's a lag, but 18 months. That's crazy. It is true. We're seeing housing prices drop while the CPI is going up. That is verifiable. We are watching that happen.
He had previously argued the Fed should only raise rates by another 100 basis points before switching to a dovish pivot. He said if they take the correct view on what inflation is, they may not have to go that high. That's the relief market. The relief the market is watching.
Wow. Okay.
So... I mean, we've been questioning whether what they're doing is actually affecting anything, right?
Yeah.
We've been raising rates since when? March?
Yeah, aggressively.
Yeah. And how much has inflation cooled since then?
No.
Yeah.
It's true. It feels like the paramedic has got the defibrillators, and they're just like, clear. Oh, the heart still hasn't started. Well, fucking up the crank, up the voltage. Maybe no. Do it again. Still nothing. Do it again. Still nothing.
Sir, that's a sack of potatoes. No, I was thinking more of the mantra in the military they used to tell us was in a casualty situation or crisis, do something, even if it's wrong. Do something, because doing something wrong is better than doing nothing at all.
Interesting.
So I wonder if there's some of that mentality. We have to do something. What can we do? Well, we can turn this knob and adjust, adjust the cost to borrow. Well, let's do that. It's not working. We'll do it some more. Right.
Yeah. I hope somebody figures something out, because shit.
Well, I think what's going to end up happening is inflation's going to start coming down normally, like it will eventually, based on corrections to the supply chain, everybody's been saying has been driving most of this. And
yeah,
then everyone's going to be like, we did it. And they'll probably win a Nobel Prize.
Right. Well done, gentlemen. Well done.
Yes.
Well done. Raising interest rates sure fixed that war in Ukraine.
Anyway, what do you got for us?
I got a different kind of Federal Reserve story. The Federal Reserve is looking into trades Atlanta District President Raphael Bostic made. He's the head of the Atlanta District Federal Reserve.
Interesting.
They've got those blackout periods.
Yeah.
Yeah, apparently he's been trading during those blackout periods.
But it wasn't intentional because a third-party manager was handling his investments.
That is absolutely what he's saying. And it's strange to me because he says himself and his financial advisor, neither of them can actually do any of the trading. It's a third-party manager handling his investments.
Okay.
And that feels really weird to me.
Well, is that so he can basically be like not tied to it at all? Like, does he even know who's doing it? Can he call him up and be like, hey, buy this for me? Or are they like completely handling his trading and not discussing it with them at all?
My understanding would be like, it's my money, you're my financial advisor, and some guy down the street is the one actually trading. So I'm like, hey, Kyle, I really like semiconductors. And then you say to the other guy, like, hey, semiconductors. And he's like, sure.
Yeah. It sounds like there's a lot of that wink, wink, nudge, nudge. I'm not saying that I don't think the market's going to fall, but man, I sure wish I was positioned for that.
Right. And it wasn't me. It was the guy down the street. He was trading during those periods. I wasn't doing it.
If we learned anything from Phil Mickelson, you just have to deny.
So the Atlanta Fed issued a statement. We welcome this review and will cooperate fully to ensure this matter is effectively resolved. And Bostic himself is quoted as saying, I sincerely regret if my actions raise questions about my standards, behavior, or motivation. The Federal Reserve Bank of Atlanta's systems and processes to maintain the public trust or the commitment of the Federal Reserve to transparency and accountability in fulfilling its mission.
Mm-hmm. I would think that if anybody was handling the accounts of a Fed member, that they would make damn sure they knew exactly what they were doing and when they were allowed to do it.
That's just crazy. Why?
Yeah.
Why would they want to follow the rules?
Because they're taking the responsibility on and acting as a third party.
Yeah,
yes,
precisely.
Jeez.
This has been a pretty hot button issue since it was disclosed, if you recall, that Powell himself had been involved in trades during blackout periods in 2020.
Mm-hmm.
Former Vice Chair Richard Clarida. At the same time, we had two regional presidents, same level of Bostic, resign. Eric Rosengren of Boston, Robert Kaplan. It's just a bad look.
Look, why would you want to be a Fed member unless you get access to information that you can make money off of? There's no other reason.
Right.
We can't take away their ability to trade. They won't run.
What's the incentive to run a Federal Reserve Bank?
I'm tired of being so cynical.
We didn't start out cynical. It was education that made us this way, Kyle.
Oh, no, I was always cynical. It's just gotten worse.
Okay, I didn't. Oh, what else we got for general news?
Okay, it's not all bad news.
Okay.
Bank of America sees a silver lining for the stock market's recent plunge this year. Mm-hmm. They believe that valuations have been reset and that U.S. investors should be able to avoid a, quote, lost decade.
Oh, did we lose a decade somewhere?
I think they were worried about losing a decade if the stock market stayed elevated for some reason. Like we just basically move around nowhere.
Going to go sideways for 10 years?
Yeah, I think that's kind of what they were afraid of. But they think that now because the stock market has declined 25% since the beginning of this year, that the chances of that happening are now much slimmer.
Okay.
So they're using their valuation model that BofA uses is suggesting forward returns of 6% over the next decade. Excuse me, hiccups. That is the highest return forecast since May of 2020.
They expect the market to return 6% in the next 10 years.
Yeah, if their forecast is accurate, they're putting the S&P at just above 6,500 by 2032.
Wow.
With the addition of a 2% dividend yield, the total returns could be as high as 8%. So, let's see, Subramanian. Where do we get these fucking names from?
Yeah.
I need pronunciation guides for these articles. Valuation matters long term, explaining 80% of subsequent 10-year returns. And this year's bear market provides an attractive opportunity for long-term investors. A representative for BofA said that I will not pronounce because I will butcher it. Saying, while the long-term forecasts are looking the best they have in the last 2 years, short-term still looks dicey and near-term pain still remains. She said, while the S&P fell below our year-end target of 3,600, we continue to expect volatility in the markets. She also added that 20% of her bull market indicators have flashed positive so far, and typically the prior stock market bottoms have seen at least 80% of those flash green.
Okay.
So the BofA says that things are looking like if you're a long-term investor, like it's time to start nibbling, I think is what they're trying to say.
Yeah, right.
I wouldn't go all in right now at this point, but like, we talked to some people talk about splitting up your investment capital into like chunks and then deploy it at certain levels. Like I think what she's trying to say is that they expect this to be a good point to start adding to your long-term holdings.
Okay. Well, I don't know. I don't see why Bank of America would have any reason to sugarcoat things.
I know, right? But I mean, it's still not like we just talked last week about peak inflation being an excellent buy indicator.
Yeah.
Like 13% returns year over year if you go long, like on the highest CPI print or the highest inflation.
Right. Like the higher inflation goes, the more you want to nibble.
I don't know about that. I think you want to see it start to decline. I think once you start seeing it coming down, then that's when you jump in there.
Okay. All right.
So I think we're getting close to that point, though.
We could be. And my next story could be an indicator that
is the opposite. Okay.
could be an indicator that things might go that way. The Treasury Department is now asking the primary dealers of U.S. Treasuries whether the government should buy back some of its bonds to improve liquidity. Yeah, to improve liquidity in the $24 trillion market.
Oh, with what money?
Good question.
And aren't they like reducing their assets?
They have been, yeah.
So are they saying that maybe we've done that too much and we need to start buying again, or is this a completely different asset?
Yeah, well, so what they've been doing is they've been reducing the balance sheet by letting the bonds reach maturity without buying anymore, so letting them expire.
Yeah.
And now they're asking banks, like, hey, you want us to start buying more of those bonds again?
Okay.
Yeah.
Huh. When did this come out?
October 14th today, Friday, October 14th.
That sounds bullish. It sounds like a shift in quantitative tightening.
Yes. This is, to me, sounds exactly like, hey, maybe we just always do the easing now, guys. Maybe that's just what we do now.
Or maybe, yeah.
It's further asking about the costs and benefits of funding repurchases of older debt with increased issuance of the so-called on-the-run securities, which are the most liquid and current issue. I don't know what all that means. But I did, further down, it does talk about how in response to the 2008 financial crisis, the Fed put in rules that would require the dealers to hold capital against these treasuries.
Right, because they have to be able to sell them back anytime they want to.
Yes, that's going to limit their ability to take on risk, particularly when things are really volatile. So they're thinking, like, well, maybe that's another piece of it. Like, hey, the thing we did to take to make things stable after 2008, maybe we undo it a little.
Or do it again.
Well, no, they're wondering because briefly in 2020 they allowed banks to have less capital on hand.
Oh yeah.
And they're thinking maybe we'll start buying treasuries and maybe we'll let you start spending that money that we're making you hold.
And did any bank say no?
No word. Right. Certainly not Bank of America.
Yeah, I'm guessing they're all 100% on board with getting more money.
This is part of their regular survey of dealers before they do their quarterly refunding, their quarterly announcement.
Okay. When is that announcement expected?
That's a good question. If I was a good reporter, I would know the answer.
Where's Yellow Man?
Yeah, right. Yeah. So we'll see if they decide to. I mean, this isn't just stopping tightening. This is literally like, should we start easing again?
That's kind of what it sounds like.
And we know the UK The UK banks are easing at the moment.
Yeah. I'm just surprised that it wasn't getting more press, if that's what we think it is. I mean, maybe we're misreading that. If anybody has any better knowledge on the subject, feel free to message us.
Or you know what? It could be a big fuck you. It could be like they're asking the banks.
Yeah. Don't you wish you could have this?
Right.
Too bad.
hey, Kyle, you want me to write you a check for $100,000?
I would love
Wouldn't
that.
that be nice? Would you like that?
That'd be super nice. Yes.
I bet you would. Not going to happen.
Right.
Anyway, all right. Okay.
Oh, and then last thing I wanted to touch on before we move on to the next thing.
Mm-hmm.
Yellow Man sent us a response, but man, it was a lot more in-depth than I thought it was going to end up being.
Ooh, wow. Okay.
I'll give you the short answer, but I think we want to do a lot.
The short answer to what? Remind me of the question.
The question was, if you didn't want to buy Apple products because they've been linked to child labor, can you buy from Samsung? Does switching to Samsung make any difference?
Yeah.
Short answer looks like no. But
of course not.
Yeah. So I think we'll do a deeper dive into this story for one of the news episodes next week.
Okay. No, that sounds great.
Because I think there's a lot of stuff to talk about in here.
I know. I got to look at that email that he sent us, and I was like, "Who sent us this in-depth 10-page analysis? Like, where's this come from?" Really, really wonderful stuff.
It's from that's from the China Shop Investigative Reporter. He did give us a little pushback on trying to get him to bike to China.
Oh,
yeah. He said he couldn't bike to China. I was looking up paddle boats just to see how expensive they were, but I mean that's like the mountain biking of boating, right?
Well, I figured we'd put him on a cruise ship and he could just bike around the deck the entire time.
No. I was going to get him one of those boats that you rent at the lake that you paddle with your feet.
So you're like biking on the water.
Yeah, just like riding a bike. But yeah, exactly.
Yeah, good call. Okay. All right. Well,
And I think that was actually more expensive than the price of the plane ticket he was looking at.
Some people are dedicated to the job they don't get paid for, and some people aren't.
Yep, exactly.
I'm blown away, honestly, by the amount of effort he's put into this stuff.
Yeah,
it's fucking love you, Yellow Man. It's amazing.
So yeah, look for that probably next week sometime.
We will get there. Hey, you know who else does a lot of hard work?
No, I don't.
Because it's not me. It's not me. If you were going to say me, you're way off.
I wasn't.
No, it's the awesome, amazing team over at Order Flow Labs.
Oh, yes.
Those guys have the most fantastic stellar toolkit for trading futures, whether it's Sierra Charts, MotiveWave, or NinjaTrader. They've just got the best custom studies for structure and execution, like having a professional futures trader leaning over your shoulder saying, "Oh, look at that. But what about this? What about this?"
Like, hey, it takes a long time to draw that box. Let me do it for you.
Let me do it for you right here instantly. Buy sell zones, exhaustion absorption detectors, reconstructed tape. They got something for everybody. Constantly testing these studies and offering new sources of education. They've got their own amazing Discord. They've got YouTube videos. Just a solid team offering support and help to use these incredible tools. So if you are trading futures, you really do yourself a favor. Check them out at orderflowlabs.com.
And Two Bulls in China Shop is also proud to be affiliated with Trade Pro Academy. Trade Pro Academy is the educational platform that offers institutional trader development programs to new and experienced independent traders. Mm-hmm. Which means if you don't know what you're doing, check them out so you can learn to trade like those big institutions.
Yes.
George was trained by them. That's where there's no word on whether he stole the course material or recreated it, but we know better than to insinuate anything around here.
Yes, I would never insinuate that George was in there with a pencil camera taking pictures of documents and photocopying them at a Kinko's in the middle of the night. I would never insinuate that.
I wouldn't either, especially if you listen to him teach one of these courses. You can tell he really knows his shit.
Oh, yeah, for sure.
Speaking of which, they got a great staff of highly knowledgeable and successful traders, and there's really no better place that we found to learn everything you need to know to be a successful trader. You can find them online at tradeproacademy.com, or you can use our affiliate link in the episode description. It's a great way to support the show and improve your own knowledge and skills. If you do join that Discord, we have links for a 10% discount code. Just shoot me a message if you're having trouble finding that or using it.
Personal anecdote time. A friend of mine was like, hey, I'm about to come into some inheritance. What should I do to learn about stocks? And I was like, fucking Trade Pro Academy.
Yeah.
And then he gets back to me like a year later, I swear, a year later. He's like, hey, I got all that inheritance and finally the money's not tied up. What should I do? And I said, Trade Pro Academy. And he's like, still? That's still your answer? I was like, yeah. It's still the place to go learn. Come on, man.
Yes, like, it is.
Oh, all right. Send me that link. Yeah, right. Still my answer. Oh,
still my answer.
All right, let's talk about some stocks. Let's do it.
Yeah.
Stock time! Now it's talk about stocks time. Looking for setups, it's still not advice. Big moves, fresh news, and earnings. All that we're saying, it's still not advice. Stock time!
Please don't do it.
Okay.
Investor Loan Source is a private money lender that provides investment property loans to real estate investors.
What do they offer?
Well, Kyle, they use 100% private capital, offering a variety of products, including fix and flip loans, commercial loans, and hard money loans.
Interesting. And where are they available?
Well, glad you asked. They currently lend in 25 states and are quite eager to talk about your real estate project with you.
So, where can we contact these guys?
Oh, it's easy, Kyle. It's easy. We can contact them today at 409-735-6267 or find them online visiting www.ils.cash.
What was that number again?
It's as easy as pie. 409-735-6267. Contact them today.
What was the name again?
Investor Loan Source. Find them at ils.cash.
Hey, well, Kyle, I guess I'll lead us off.
Yes, what do you got for us?
Do you remember that electric vehicle company that turned out to be all hype, like they were using gravity instead of motors?
Oh, yeah. It was Nikola.
Nikola, yeah. Those guys. Surprise! Founder Trevor Milton has been officially found guilty of fraud.
Is he in the U.S. or did he run away?
Right. No, he hopped on Blue Origin. He's now in the backseat of the Tesla floating out in space.
There you go.
Yeah, apparently you can't just say whatever you want to your investors to raise money and pump the stock. You have to actually be truthful on some level.
Yeah.
He's found guilty of 3 of the 4 counts made from making those false statements to drive up the stock. He got that stock up to over $90 a share.
What's that now?
3.
Oof. Gosh.
A little bit of a drop.
Well, they had a partnership with somebody too, and was it GE or GM? I mean,
yeah, it was. They did briefly.
Did that actually go through, or did that fall apart?
This article doesn't mention it specifically, but I'm gonna.
Is GM one of the plaintiffs?
Oh, they may be. What's crazy is when he got this thing up over $90 a share, Nikola was briefly more valuable than Ford.
Yeah.
By market cap. That's insanity.
Yep.
The office in Manhattan that was prosecuting him says that he lied about nearly every aspect of the business.
Then why was it only 3 of 4 counts?
I think because the 4th count was added a year later.
Oh, it was too late to get it on the docket.
I don't know. Maybe he was found guilty of it, and I'm just misreading the article. Follow the link in the episode description, and you can decide for yourself. I'm sure he's guilty of everything. I mean,
yeah,
this is flashy. I mean, let's if you think about just calling it Nikola after like Tesla is the big one going, and he's like, yeah, I'll call mine Nikola. Yeah.
Be the perfect compliment.
Perfect compliment. Yeah, we do electric cars too. See? Yeah, look at this truck going down this hill. Look how good it goes. The company themselves had to pay charges. Had to pay fines. $125 million worth to the SEC that they had settled. And crazy enough, this guy still owns a ton of Nikola stock.
He didn't sell. I mean, I guess say what you want if he believes in the company.
Right. Just really like the stock, guys.
Right.
just wanted to circle back and remind everybody that, sometimes there are consequences to your actions. Not everybody's Musk and can just get away with saying whatever the fuck they want.
Right. Well, speaking of a blast from the past, do you remember Activision?
Oh, yeah. They had a lot of video games I played in the 90s.
They still make good games.
Oh, yeah, but I don't play them.
But they just got hit with another sexual harassment lawsuit.
Oh, shit.
And nobody's surprised. This time, it was a female employee known only as Jane Doe, listed sexual battery, harassment, failure to prevent harassment, gender discrimination, and intentional infliction of emotional stress.
Whoa, sexual battery?
So, yeah, this whole story is fucked up.
Oh, no.
The person, she's speaking out against the actions of Miguel Vega, a former employee, and Doe's former manager. They had a history prior to working together at Activision Blizzard. Doe recalled that she'd met him in 2009 or 2010. She entered a virtual friendship with him, then sent him compromising photos while in the friendship. That relationship, however, ended in 2011 when she met her future husband. Vega, later on in 2016, helped Doe get work in Activision Blizzard as an independent contractor before she became the community engagement coordinator for Player Support Department in 2020. That is where Vega started making unwelcome sexual advances. According to the lawsuit, he would repeatedly grope her, on various occasions try to kiss her. Every time she rejected his advances, he would tell her that one day it'll happen, or one day he'll give in.
Whoa.
He also would belittle and insult her. She stated that in the suit that Vega always made her feel small, which he would dismiss as her being too sensitive whenever she called him out.
Wow.
And then it gets even worse. Vega also threatened to release the compromising photos she sent him from back in 2009-2010, threatened to blackmail her with the pictures so she would leave her husband for him.
What?
She reported the revenge porn threat, which is a great quote.
Yeah.
I thought I'd be reading that. Revenge porn threat to management, which led to Vega being fired the next month. Doe, however, said that Activision's slow action in dealing with the situation was them basically ratifying Vega's actions. It took him a month to fire this guy.
Wow.
Was she showing up to work during that month, or was he at least on leave of absence while they did investigations? Doesn't really specify, but
right. And I mean, if she's got the proof, right? Or it wouldn't have gotten this far, right? Yeah. What's it take a month? Why does it take you a month to read the messages and be like, hold on, we got to think about this?
Why don't you just take a week off? We'll see if this blows over. I think that was the attitude.
Yeah. Wow.
Yeah, no, that one's not blowing over.
So you think Microsoft's still going to buy him?
Actually, I do. I mean, these have all been from the same time period. I don't think we've seen new ones come up since they have taken, I don't know if taking seriously is the right, it did at least try to address this. They did some leadership changes.
Yeah.
I think if we see a new one pop up since the original story broke, then I'd start getting worried.
Or at the very least, that might be what it takes for Activision to clean up its act, is Microsoft buy them and just clean house and get all new people in there.
Be careful, Dan. I'm afraid that Yellow Man's going to get another story.
How pervasive.
Let's get through this first one first.
Does Microsoft?
No. Don't even ask it.
No, I want Yellow Man to do some corporate espionage. He needs to get a job as a corporate exec at Microsoft and find out what's going on.
No. Let us finish the first story. All right. What else you got for us?
Hey, you remember Rupert Murdoch?
I know the name, but I don't know why.
You don't know why? The feisty Australian who started Fox.
Does Family Guy rip on him a lot?
Probably. I know The Simpsons have been ripping on him since the 90s.
All right, that makes sense.
Yeah.
Okay. What about him? What's he doing?
In 2013, he split his news company, News Corp, and Fox. Mm-hmm. And now he's exploring trying to reunite them back into one company.
Oh, so he's calling all his old friends and saying, hey, guys, we're getting the group back together.
We're getting the gang back together.
We're going to make another run at this news thing.
So obviously Fox does Fox News and Fox Business. News Corp does Wall Street Journal.
Oh, okay.
Amongst others. And he's gonna bring them back together. 21st Century. I don't know. He's 91. Because he can.
The glory days from 10 years ago.
Right. Before I die, I want my companies back together under one roof. I mean, well, we could speculate it has something to do with the multi-billion-dollar defamation lawsuit from Dominion Voting Systems.
Oh, yeah, that might have something to do with it.
Could be. Fox Corp and Fox News are facing that, and News Corp isn't. I don't know how it would help.
Other than just access to more capital.
That that could be it. That could be it right there. Like he knows they're going to lose, and he's like,
or maybe Wall Street Journal had the better lawyers on retainer.
It would consolidate his media empire, and it would, according to the article in CNBC, cut costs. Mm-hmm. Interestingly enough, these discussions are coming as the audience for both print media and cable television are shrinking. Yeah, because on top of the Wall Street Journal, he also has the New York Times. That's part of News Corp, and some UK and Australian newspapers.
Okay,
because apparently everybody's getting their news and entertainment from social media, online, streaming, and podcasts like this one.
Yeah, which are not real news sources. If you're listening to us for news, we are not real reporters. We try.
We are editorializing. We are two guys just talking about the news. We're no Yellow Man.
I would say we're probably better than some of the other choices, though.
Well, I like us.
Yeah, I do too.
Yeah. So we'll see. We'll see if those come together. News Corp shares were up 3% on this news. We'll see what happens.
All right. Well, should we move on and do some crypto?
Ooh, crypto.
I got some crypto in my wallet, hanging out on my Ethereum blockchain. Yeah, I got some crypto in my wallet. Some Doji, Sushi, Polka Dot, NFT. Decentralized, anonymized, fabulous cryptocurrency.
Kyle, I think you got an Ethereum story we can lead off with.
Well, I might have stolen it from you because I couldn't find any good ones. I haven't curated my feed quite well enough to get good crypto stories that aren't.
That's okay. I stole the story from CoinDesk.com.
Oh, nice. No, Ether has become deflationary for the first time since the merge.
Okay, what does that mean?
So what that means is the number of tokens fell by 4,000 over the last week, meaning that more Ether was burned verifying transactions than was created.
Oh, so there's actually less Ether tokens now than there was a week ago.
Yes, there's less in supply, a 0.13% reduction in supply over the last week.
Okay, so what did that do to Ether prices?
Well, everybody, some were arguing that a drop in supply should have resulted in higher prices, assuming that demand stayed constant. But Coinbase said that the price has fallen about 4% in the last week. Just because you take away some of the asset, like if the demand isn't there to support the current price anyway, like that doesn't mean that it's going to suddenly make the price go up.
Make it more valuable.
Yeah, it just went down less than it probably would have without that happening.
Oh, yeah, I don't feel like that's good news for Ethereum. Holy shit.
Well, let's see. Yeah, because the rate of creation has fallen by 90% since the merge.
Wow. Okay.
So yeah, ever since they switched to proof of stake, looks like there's been a lot less new Ether created. I mean, a lot less.
A lot less. That's okay. Yeah, I'm looking at the weekly chart. It did hit a low. The low of the week was 1,160, and it closed the week at 1,296. Mm-hmm. So, I mean, the candle looks decent, but it's still a red candle.
Well, if it keeps going down, we might be able to afford a node.
Right? How many ethers do you need for a node?
I don't know. It's proof of stake now, so I just need enough coins, right?
Yeah.
I think George looked into it before the merge. I don't remember if it was Bitcoin or Ethereum, but he said it was like 50K.
You got to stake 32 ether.
32 ether. All right. 32,000 right now.
Yeah.
If that gets down to 32 cents, we can probably afford it.
Sweet. Let's do it. We'll have the China shop node.
I hope it doesn't get that low.
That's going to be crazy.
All right, what else you got for us?
So the crypto community is continuing discussions on why inflation isn't pushing more people into crypto. Like, why is cryptocurrency not an inflation hedge, like Bitcoin or
right.
or Ethereum as it's deflating? There's less coins. And I think it's funny because we're seeing things. I'm seeing things like in actual news stories where they're like, a source on Reddit, a Reddit user said, it's like, you know what they're talking about over on Reddit.
I know, right.
So the what it comes down to is because inflation is so bad, people are spending money on basic goods and services rather than investing. Like just nobody has money to invest in crypto. That's why it's not becoming a hedge for inflation.
I think there's other reasons than that.
Well, like what?
Another user believed that it has something to do with its volatility, lack of use cases, and the space being plagued by a lot of scams, rug pulls, and hacks.
Wait. People don't like the fact that a hacker can just steal it from them?
Yeah, I don't think they do.
Could you imagine, like, if you went into your bank and you were like, hey, I need to make a withdrawal from my savings, and like, ooh, sorry, we got hacked.
Right.
Wait, what? What do you mean you got hacked?
If crypto is to have a future as a hedge against inflation, like really regulation is really going to be needed for that to happen.
Yeah.
Because you really need that FDIC insurance.
Yeah, that insurance definitely helps.
Yeah. And crypto knows it because they've falsely proclaimed to have it.
And according to this article, well, I should say, according to a community member on Reddit, in terms of volatility, Bitcoin has been less volatile to some tech stocks than some tech stocks this year.
Yeah.
So maybe the fact that maybe it would be a good one because it's like Nikola. It's been doing better than Nikola this year.
That's true.
And there's scams everywhere. Real estate scams, fake gold scams, pyramid schemes.
Perfume scams.
Scammers be scamming.
Yeah. I just got one in the Discord the other day.
Oh, wait, you got one and I didn't?
I don't know if you did or not. I reported him. I posted the screenshot though. I told him when he's ready to learn to trade, shoot me a message. This
is those feet pick all over again. People love you online. God, they don't even want to scam me anymore. They just know I'm broke.
I think it's because I was in the Unusual Whales server. That's where most of them come from.
Yeah, I love you, Unusual Whales, but you got a real scam problem with your community.
Yep.
On Thursday, politician Nigel Farage, a British politician, was saying that one of Bitcoin's appeals is its fixed supply, and it can't be inflated away. And he thinks that it's going to become a trusted means of exchange in Europe here in the next 2 to 3 years. So like you're saying, more government adoption and hopefully maybe some FDIC kind of insurance, it could really be that inflationary hedge, but it's not there yet. Clearly, as
the only problem with that is it's gonna act more like an actual currency probably, and be a lot less volatile and be a lot less appealing to people trading. So I mean, I guess you either Wild West or stable, one or the other.
Yeah, but not both.
Yeah.
All right. Yeah. Oof. Well, speaking of the Wild West.
Does that mean, do I need to shoot myself because you were just moving this week?
Yeah, I have been, and let me tell you, I'm exhausted. I've been moving to Las Vegas, and I'm tired. Also, Las Vegas.
Would you say you've never slept?
I may have slept, but I don't remember.
That sounds like Vegas.
Yeah, Well, it's weird here, Kyle. They've got fucking slot machines and gas stations.
Oh, we got that here now.
In Illinois?
Yeah, that's becoming a lot more popular.
Why?
I don't know. I asked the same question at the gas station. Like, who is pumping gas and decides like, oh, I'm going to go blow $20 real quick?
Well, that's what I'm saying. Like, I'm going to go in, I'm going to get my 6-pack of beer and some snacks, and I might as well then drop $10 in the slot machine. See what happens.
Yeah,
What?
it's a lot more frequent than you think.
It would have to be because they're everywhere.
Yeah.
Anyway, that's not the point of this segment. Kyle, how'd you do with trading this week?
All right. Well, let's talk about my good first of all.
Mm-hmm.
I've been finding myself able to recover very well from poor decision making.
Good. That's excellent.
That is good, but there's a caveat in there.
Uh-oh.
It's the need to recover is a problem.
Oh.
I've been finding a lot more lousy trades starting to creep in. And like I've been doing a very good job of taking the break, resetting, coming back fresh and ready to go again and making better decisions and still being able to end the days green most of the time. I still ended the week green, even though I probably lost half of whatever I made in commissions at least. But that is a good side. That's the good I'm going to take away from that. But there's definitely some stuff that I got to get working on here. For the bad, I got to list my morning routine here because first of all, it took me a week and a half to finally put my affirmation on the sheet, the worksheet we're doing with Rich.
Yeah.
And I actually missed taking my set scores before starting trading 2 days in a row.
Ooh.
I still took them. I still took them throughout the day, but I did not do what I've been planning on doing, and that's taking them before I start trading.
Yeah.
So whether that would have helped me identify some of those things that put me into an early hole, I can't really say because I didn't do it.
You're right.
And that's not good.
Right.
And then we get to the ugly, and that is our old friend overtrading showing up again. I took 10 trades on Friday, Dan.
Ooh.
You know how many I took Monday through Thursday?
5?
13.
13. Okay. Oh, wow. Okay.
Averaged 3 a day. And then on Friday, I took almost triple that.
What do you think led to that? What caused that to happen?
Well, I think some of it is that I've been taking the 30-second open range trade a lot lately. It's actually been like the one trade that I feel most confident about. And I think I just started to over rely on it. So like, for example, today, I tried it after a failed push lower, which is one of the things I look for when I take that trade. Head faked and stopped me out. And then I decided to try the low because now the head faked the top end, might as well go back to the low and see if they can break out from there. Well, head faked again on that one. And then for some reason I decided, let's try it a third time. All of this happening in the span of about 2 minutes. So it's because I'm not doing what I need to do when one of the things that I'm supposed to be doing when I take a loss is take a minute and just, feel the emotions and let them kind of wash over me, like experience it, process it, let it go. And there's no way I had enough time to do that. And in fact, I'm going to make sure I update that spreadsheet to not give me a decent score for that today because I think I definitely didn't do that.
Yeah.
Yeah, I'm going to make that a 1. So some of it is just over-reliance on that. On the plus side for today, I did take a couple pullback trades that worked out really nicely. I'm starting to get my confidence back in that setup. But it's just it's all confidence, man. It's all dives down into that, I think.
Yeah. Confidence
and just fear of losing.
I know I've been there myself with that spiral, and it's like I get almost to a point where I'm like, well, I've already lost so much, it doesn't fucking matter. None of this matters. I'll just do it again. Whatever. I
managed to avoid that, and I'm very pleased with myself for not having that mistake again.
Good, because that's the one that plagues me. Like, and it's so weird, right? Like, I'm caring less when I'm still trading and I'm still losing. Like it's like, why am I still trading? Like, I don't know. Maybe there's like this hope that like I can regain my dignity if I hit a big win.
No, it's because that getting it back is it's that purple, the pink dragon that everyone's chasing. That's what was that movie with Al Pacino, the gambler one where he's like doing the football picks and gambling. Any Given Sunday? No, I don't think it was that one. No, that was that it?
I don't know.
I don't know, maybe. I don't remember what the movie was, but he said in that, like, I'm not addicted to the win or the loss. I'm addicted to that feeling of losing everything and then like being able to like still be there and like realize that you're still who you are. The money doesn't mean anything. Mm-hmm. I think actually though, it's not no one's chasing the big wins. People are chasing the get back to even. And I think that's what I have to watch out for.
Yeah.
It's like, oh, I'm down, but if I can get this one trade, that'll take me right back to even. I'm right back where I started. Like, oh, that one didn't work. Well, let's double up and try it again. Just got to hit one. And it'll eventually come. and then it's all back to normal. But I think we've learned that that's how it counts below.
Yeah, that's certainly not following risk management.
So one thing that's been helping me, though, is when I start to feel like myself slipping into that pattern, I'll just flip over to Sim and just go ham.
Yeah.
Just start smashing that buy and sell button. Get it out of my system.
Buy.
I'll just keep buying until you turn around.
I've got 100 contracts on. Let's see what happens.
Look, I'll just go nuts martingaling into this thing.
Oh, speaking of going nuts, you want to make a bet?
Oh, man. Do you have any suggestions?
Yeah, let's listen to some music.
I need it, wanna beat it, gonna win it if I take it from you. I'm filling my positions, quit your bitching, random's gonna lose. Got a chart full of levels and a stop that's not too tight. It's bet picking time in the shop, so pick 'em right.
I feel like my suggestions have been leading us astray pretty consistently.
Yeah, now I'm afraid to make a suggestion because if I do just as bad, then I can't hold it over you anymore. All right, I've got two ideas here.
Okay.
Hear me out on this one. BP looks interesting to me right now.
Okay, BP. Let me pull that up. You don't want to go long Nikola?
No, I definitely don't want to go long Nikola.
Okay, and you're thinking going long on BP.
I don't know what I'm thinking. I was initially thinking that the gap, a double gap actually, looks like it maybe wants to fill here soon.
Yeah.
The gap that starts just below the 29.5.
Yeah.
But it's also sitting right at its 200-day moving average, and if it was going to bounce, that's where I'd expect it to bounce. So I can go either way on that. I'm not really sure. The other one is I still like Rivian as a short.
I do too.
It broke down below that balance that we've been watching, that support line right around $30, and it broke down hard with good volume. It too has a gap that needs to fill down around 27.
Let's do it. Let's short Rivian.
All right, I say we do half at open, and then we look for the other half at a retest of 31.
Perfect. Count it.
And then where do you want to stop at?
Oh, nice and tight. What's it? It closed at 28.71. Let's say.
So half at 31. We're going in on, right? Remember, we're only buying half in case it retraces.
Okay.
If we're gonna add at 31, I feel like we don't want to see it above 33.5.
God, if it gets there, we're blowing out the account this month.
Yeah.
I like it though. Yeah.
Do we really care? Care?
No.
All right.
YOLO these fake dollars, Kyle.
We'll take profit at 27.
Take half at 27, the other half at 25.
25.5?
Sure.
All right. 25.5.
Oof. What's random going to do? Come on, Nikola.
All right. So random got us a NASDAQ transportation stock.
Oh, Nikola!
We have Shonergy Maritime Holding Corporation.
Oh.
Or SHIP. SHIP.
Okay. That's not Nikola.
It's definitely not Nikola, but it's also a very cheap stock.
It's not Synergy. Oh, yeah. Look at that penny stock.
That's Sean, isn't it? Shonergy?
Well, because it's maritime, I'm assuming it's Synergy. But yeah, you could also pronounce it Shonergy.
Oh, Synergy. Ah, okay.
Yeah. See what they did there with the name?
I thought a Sean owned the company.
It could be both.
Maybe it's both. Yeah.
No. Wow. Looking at this, I almost want to short this one. Well,
I kind of want to go long this one. That looks like half of a rounding bottom starting. Nice little.
Kyle, this is the worst chart I've ever seen.
Maybe, but I mean, they couldn't push a newer low even with the CPI data.
Yeah, but look at the volume on that buy.
Yeah. I don't know. This one scares me.
All right. Well, let's see what happens. They've got an all-time low of what, 39 cents? They're at 49 cents right now.
Yeah. Oh, okay. Yeah, I didn't see the rest of that chart.
Is that all-time low or that's just the COVID low?
Well, let's see. Hang on. Wait a minute. Holy shit.
Oh, that's not even the COVID low. No.
Stock used to be much more valuable.
Stock really, what happened to...
Holy crap. Oh, this must have had some reverse splits.
Yeah, something. Anyway, take that random.
This stock has been going down for a long time.
Since it IPO'd in 2019. this sucker's been going down.
Yeah.
All right. So, take that.
Yeah.
There you have it.
Thanks, Random.
There you have it. Random's got synergy, and we're going to short Rivian and watch Rivian rip next week.
I know, right?
Anyway, come back next week. We got a lot of exciting content coming out, including the in-depth dive into ethical investing, brought to you by Yellow Man, presented by us. And next week we'll find out what happened with these bet picks. Until then, though, happy trades. Oh wait,
bye.
Wait, like, rate, share, subscribe,
all that jazz.
Get a Two Bulls tattoo and share it on social media. All the good things.
Oh yes. Oh, what do we do for that?
Shit, I don't know. But now I'm thinking like I'm supposed to get a tattoo. Fuck.
If you get a tattoo and post it on social media of our logo, then you will have our respect.
Ah, yes. That is worth its weight in Ethereum.
There you go.
Oh, happy trades, everybody.
Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
Tired of long waits and rushed care at the ER and urgent care clinic? Next time, stay home and let Dispatch Health bring the power of the hospital to you.
I call Dispatch Health. A care team of medical professionals actually come to your house.
They're the same caliber of people that you would see if you were at a hospital or an urgent care.
Dispatch Health can treat most non-life-threatening emergencies.
They can do the x-rays, they can do stitches,
urinary tract infections, blood test, urinalysis, ultrasound.
It's almost everything that they can do at the ER.
You never feel rushed. They're there for you and only you.
I felt like their only patient.
And it costs no more than a trip to urgent care because Dispatch Health is covered by most insurance, including Medicare. See if we serve your home at dispatchhealth.com.
Dispatch Health really went above and beyond.
It's wonderful to have care come to your home.
House calls are back, and they're better than ever. Learn more at dispatchhealth.com.